Hey traders, Dennis Wilman, the Active Trend Trader. What the heck happened on the East Coast today at lunchtime? Something didn't sit too well because somebody hit the sell button and the index is sold off almost all afternoon. Stay with us today. We'll check that out. We'll check the indexes out. We'll also check a stock out. And also I want to share a trading tip with you. But first, take a look up in that corner and you'll see a little drop down. It'll show you how you can, one, stop flying blind by learning how to join us with the AutoPilot Trading Service. So let's jump into today's session right now. Okay, first take a look at the S&P. As you can see, S&P actually not looking too bad. This is the daily chart of the S&P, and we have gone up 10 out of 12 days with the S&P, with only 2 days that were pullbacks. What makes it different this time? Well, one, the momentum indicator is towards the high and not quite rolling over yet on the daily chart, but really looking like it wants to. Now, what are we anticipating there? Well, this is where you grab your Fibonacci's, you lay your Fibonacci's in from the low here to the high here, and you find your magic fib box. Now, magic fib box is going to see how close it gets to these moving averages right there. That nice little cluster of moving averages there are the 8-day moving average, the 20-day moving average, the 50-day moving average, and the 34-day moving average. Above that, of course, is the 8-day moving average, and right slice, jam right in the middle is the 200-day moving average. So all in all, looks kind of positive for the S&P. Let me grab a fib and we'll just throw that Fibonacci on there really quickly so you can see what that looks like. And I always do this just to kind of, once we put in a move. Now this is a move. Why do I call it a completed move? Well, one, today was on a single day was a higher low. A lower high. And also a lower low. And so today kind of fell back down. It stopped the upward momentum. So where is the magic fib box? As you can see, it is right down here in this area here. And I just go ahead and grab that, yank it across here, and there it is. And so as you can see, the top part of the magic fib box, which is a 38% retracement, is just slightly above the 200-day moving average, which is currently sitting about 446.96. Would not be surprised me if this is a continuous move up. Again, pull back to the 23 or the 38, and then rebound from there. At this particular time, one of the other things it could do with a short and shallow pullback, this was a pullback day. It was 1 day, and then it continued to rally. This may be a pullback day, 1 day. And if it breaks out the high from yesterday, we'll have to redo the fib just to make sure, see where, the new fib box is. But at this point, not a lot really to write home about. Take a look over here at the weekly. As you can see, the weekly is pushing up. As you see on the weekly, let me blow this up for you real quick. On the weekly, that magic fib box is right there at the top, and that is getting my bearings here. That's the 8 and 20 week moving averages right in there. And so that's where, would not be surprised to see it come all the way back down there, bounce on the 820, and the 40-week moving average is down here, which corresponds to approximately the 200-day moving average. Make sure I'm looking at that correctly. Yep, it's correct. So that's what we're looking at. Strong support there. And right now, what do? You wait till we get our next long setup. Because I'm still going to play this to the upside with the S&P. NASDAQ. What the heck's going on with the NASDAQ? Similar story. With the NASDAQ, as you can see, I would need to rebalance, break this out, take that off, draw in a new Fibonacci. We stalled out. We stopped right at about the 200-day moving average. There's the Fibonacci down there. And as you can see, I can bring this Fibonacci. I'll activate that triangle. Just bring it up a little bit. Go about there. And that makes the new fib box. As you can see, it's just slightly below that purple shaded area is past support / resistance. So there you go. That's where we have got our, make sure I drew that in there correctly. I did not. Activate. I want to drop it down just a taste. Down to there. There we go. Excuse me. So that's what we're looking at. Same type of thing we're looking at is a pullback into the support areas, which could be the 8, the 20, the 50, the 34. Any of those are in the catching mode to catch this, to break it up. That it did not, that the NASDAQ did not hold above the 200-day moving average is something I won't be too concerned about, but at the same time, it is showing, that could be a little bit of weakness. TSI looks like it wants to roll over, but oftentimes after it's come up with a really nice rally like this, it'll roll over, come down to about the 50% mark, then stall out and roll back up to the other side. That zero line, called it 50%, that zero line acts as a pretty strong level of support and or resistance, depending on what your trend is. And since our trend is up now, look for a rollback, and that's, again, helps us be patient, waiting for the indexes to turn around. What about the Russell? Russell looking a little bit weaker today. Of course, it was a little bit further away from the 200-day moving average, slightly below the 100, but it did make it above, and all the other moving averages are, stacked heading to the upside. One of the things we want to do is we want to go ahead and draw a trend line in here. Since we broke that trend line to the upside, I can actually get rid of this one or reduce it in size. Let me see if I can reduce that a little bit. And that's where we broke out. I'll just leave that in there. And on the next one, though, I want to draw that in here from here up to there. And so that is if we break that trend line by, 50 cents or so, and also take out the 20-day moving average, which is here, and the 34, and again, a big clump there. That's an ideal place and a magnet for price action to move to, stall out, and then roll back up. Look for TSI to do something similar there. As you can see, market forecast, we had a 3-line bearish cluster. And I don't pay as much attention to the bearish clusters. Let me show that to you. Simply because they're not quite as predictive. The TSI is more predictive once it's crossed. But again, I would expect that kind of since we are in a new uptrend, expect that to pull back to the zero line, maybe overshoot a little bit, then rebound from there. Expect price action to fall down into this range here, about, let's say, the 20-day moving average, about the 203 level, and then bounce from there. So I would be looking at probably playing options on IWM and or jumping on TZA to the upside. For our AutoPilot ETF members, you got to remember, we are already in a trade on TNA. Let me show you where we got into that. And this was an alert that went out to our members over the weekend, and basically was to highlight it. And on Friday of last week, we wanted to pick this up at about the 61.50 level, and that's exactly what we did. We picked it up some at 61.80 to 61.20, right there. Took out profits yesterday of a better than 10%. Now we're just getting a regular pullback, and we've got our stop in there at least break even. So on the rest of the shares, and so we're already profitable on this trade. Now, if this goes into a huge run to the upside, awesome. We're in it. We're ready. And if it continues to fall down a little bit, That's okay because we also have our protection in place. That's one thing we like to do with our AutoPilot Trading Service is we show you not only when and where to enter, but also exactly where I'm taking profit and also where to put your stop losses so that you are protecting your capital. And then we adjust the stops with the trailing stops to protect that profit so that you don't just give it away. So if you ever trade sometimes like a deer in the headlight, or you have a question about where do I put my stops, you need to jump over and become an autopilot trader. At least give it a try for about 3 months and see if it can help you turn the table on your trading. So this looks pretty good right now on TNA. And so then what else we want to take a look at? I want to take a look at one particular stock, and that's ACLS. ACLS, with the market even going sideways, ACLS has, and we'll start over. Let me start over with a weekly chart. And as you can see, it is in a long-term uptrend. In a long-term uptrend, as you can see across here. It has basically had a breakout and is pulling back into the breakout area, but it's driving sideways, almost like in what's called a horizontal flag, which oftentimes is a very strong pattern for further moves to the upside. So you can project. You wanted to figure out, well, where might it go? Is basically just measure this candle here, and then draw a line across the top of that for the breakout, and that's your expected move higher. And if I'm looking correctly, you're at 59 to 81. Let's just round that off to about 20 points. And so 20 points on top of 80 takes you up to where? $100. If it breaks above $100, it stays above $100, that is also a line of demarcation, which could spell that ACLS could be in a good position for the long run, which we of course we like the trades that do well and continue to move up strongly. So keep your eye on that. All the move, everything has reversed up. PSI coming back down towards the zero line. I like it. One of the things is I'm trying to pick it up about $75, but this, yesterday's, Monday's low, that may be as low as it gets. And so it would it be smart to adjust that order to pick it up at 76 or 76.12? Well, I would want to say, well, where am I away from the stop loss in that case? Yeah, and so I'm below the stop loss by about almost 5%. So I'm within my stop loss parameters to say, yeah, that would be an okay place to take the trade. I could also just be patient and say, hey, I'm going to take the trade at 75 or down here at off of the 28-day moving average. That's another place to be looking at taking the trade. And that can be a conditional order. Just sits there. It sits there. And I would renew that on a weekly basis. If it breaks down below that, that's okay, because that is where, I was reading Mark Minervini's book, one of his books today. He was talking about how this is the way you let the market work for you, by defining and identifying areas or zones of value where you want to make a trade. Let the prices come to you, have your order already in place, and that way the market's working for you rather than you trying to work the market, because it can get really tiring chasing prices. Trust me, I've been there, I've done that. So, okay, that's what we wanted to cover there. Hey, let's take a look at what was the tech tip we had for today. Let me bounce over here. Okay, the tech tip we wanted to take a look at is using volatility as a clue. Well, what does that mean? I mean the Volatility Index, VIX and VXN. A couple of things to remember: VIX, VXN. VIX measures volatility on the S&P. VNX measures volatility on the NASDAQ. In order to utilize it properly, we have to identify the range. We'll take a look at the chart here shortly. It means looking at both a weekly and a daily chart, because the weekly chart by itself is not going to, the daily chart by itself is not going to give you per se the range. And we want it to alert, and remember, it is also a secondary momentum clue. At the highs, look for a bounce. In other words, if VIX is at the high of its range, that means it's usually going to reverse and fall. That typically means the market's going to bounce and go higher. On the flip side of that, if you had a low, look for a stall or a drop in the index. And lastly, remember, trigger off your price action. Price is always king. Those are where we get our trigger triggers to actually do our trades. So what the heck does that look like? Let's go ahead and over here and look at first VIX. There you go. Now this is a daily chart on VIX, and as you can see here, I've laid in some price levels. The first one is up here at, and again, you can actually trade the VIX, but I've got one up here just a little bit above 36, and I've got another one down here just a little bit below, around 16 or 1540. But as you can see, that's where we're dropping down to. So I want to have alerts in here. And what's going on currently with this entity? Well, as you can see, draw this in with the, you can utilize just your charting software to just lay in there's a trend line. Well, what happens? You can either wait for it to break back above that trend line. What do you think is going to happen if it breaks back above that trend line? Well, one of the things that will happen is price action should slow down. Doesn't mean it's going to reverse and stop going up, but it should slow down compared to what it's been doing in the past. When I was saying it, when this is at a high, look for a reversal back down to the downside. I also want to be looking at this on the weekly chart because you get a much better picture, I believe, of where these max lows have been. As you can see, that's been down there about 1547. You can probably get up to, as you can see, I put an alert in there about the 1677 level, where price action or if the action on this comes down a little bit lower, that will trigger it. And that would be telling me that, okay, that's where I may, and here's the way you utilize this with your swing trades. If I'm swing trading this over a 3-4 week period, and it gets down in this lower reversal area, I want to basically be looking at reducing, taking profit and or tightening my stops. Now, if the market is, in a strong uptrend, it's not going to bounce real high here. It's not going to get up high. It'll just continue to drift higher, higher, higher. This index becomes less effective there. Now, so you want to be taking a look at it at the extremes. And we'll take a look at that here shortly on a fast low, basically right there. And I'll just lay it. And what I'll do is I'll lay in, why don't I lay in a, where'd that sucker go? There we go. It's that low there. And I want to, on the flip side of that, 124, which is that high right there. Reverse that. There we go. Now I go ahead and activate that, drop it down a little bit so you'll be able to see it a little bit closer. closer. There we go. So anytime it gets in there, again, I want to have on alerts, because if it gets up into these highs, oftentimes that's the an initial clue that price actions are getting ready to reverse. So so we have those two dates. Let's go back over here and see exactly where those were, right there. And that is, now again, when this is low and starting to head up, prices on the indexes are typically high and starting to head down. So what were the prices on the S&P doing on the 4th and 5th? And then the other one we had over here was on the 24th. Let's go over to the spider. So on the third, keep going back over here. Look right there. Okay, there's the 3rd and the 4th. That's pretty darn good. That's where, as we said, the S&P actually hit a high, reversed down as the VIX was hitting its low and reversing up. But what about the 24th? Let's run across here to the 24th. There it is. And guys, I did not rehearse this. I'm seeing it live for the first time myself also. I mean, I pay attention to it as we go, but I didn't go and say, oh, let's cherry pick these. There's the 24th right there. That was the low on the S&P. Did we get a tradable trade after that? You betcha. Still stayed in a downtrend, but we fell from there. What was this day right here? Or better yet, what was this day right here that started the new rally? 314. Go ahead back to VIX. And what was that day right there? 318. And this is what's really beautiful. We had a negative divergence here. And there is 314, 318 right there as we came back in. Negative divergence. And away we get. Rally attempt from there. So again, if you like that as a way to basically utilize and potentially, if you like understanding the VIX a little bit better, just give me a thumbs up. Let me know in the comments if you have any other suggestions, on what we can cover. Just let me know, because I'm trying to put together these tech tips in such a way that you can load up your toolkit and become a better swing trader and take advantage of those swings and be much more profitable with more consistent and reliable results to help you trade your way to wealth and financial freedom in less than 2 hours a week. So aloha. We'll catch up with you next week. See ya.